What is good, guys? It's Rey-Jay back with another video, and in this one I want to break down what's going on with the overall market, what you should be watching for moving forward. I'm also going to talk about SPY, Nvda, Tesla, the QQQ, and a couple of tickers out there, and break down why tomorrow is going to be an absolutely massive day as we have Apple's and Amazon's earnings coming out. But before I break anything down, all this information, before I get into any more details, let me just mention a couple of things. I'm firstly not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends very soon. It ends today, so check it out before they run out. There are only about 15 hours left. But anyways, now let's talk about the market, what's going on with it. So in the morning, the market ended up gapping down after we had this bearish news that came out involving the US's Fitch rating ending up to just dropping and getting downgraded. And after that happened, this led to some fear amongst investors, which caused even more selling. But the real question is, will this fear perpetuate, or will we see a bullish catalyst to help the market bounce? This is going to be heavily determined by what happens for tomorrow. I will talk about all of this in just a couple of minutes. But for now, I just want to remind everyone that the market used to have, whoops, let's just close that real quick. Right now, the market it's on greedy mode right now in terms of the fear and greed index. It used to be extremely greedy. 1 month ago, it was extreme greed. A week ago, extreme greed. Yesterday, it was extreme greed. Now, today, it's just greedy. So the market's starting to shift this way around, becoming more fearful than before. And the market still remains at these extreme greed levels right now, and this typically is what happens when the market is due for a pullback. You can see right over here the extreme greed levels were very similar to what we saw back in January of 2023 before we got this little pullback right about here for many stocks out there. Also, the same thing is showing on different indicators such as the McCullen volume summation index. Same thing, it's extremely greedy, and the market is once again in a very interesting place. Now, looking at put and call options, this is the 5-day average of puts divided by call ratios right over here. You can see that's actually relatively low as we start to see a lot of call buying, which helped to bring this down over the last couple of months. So a lot of people were buying calls, but this started to slow down as the puts started getting bought not too far back. And finally, this is very important because market volatility is quite neutral right now, as the VIX is not really doing anything too crazy. But if it does get above its 50-day moving average, this could be another sign that the market is once again going to see somewhat of a fluctuation. Now, it doesn't always guarantee that there is one false alarm right here like in May. Besides that, every time it's broken above that, we've seen the market slow down to some degree. And we're going to see if it happens again moving forward. Now, the news is coming out right over here. Many people are saying it's very strange that Fitch just downgraded the US, which is very, very strange in their eyes, from a AAA rating to a AA plus. Now, in my opinion, the reasoning behind this is actually very peculiar, and I think they're actually right about that. Their reasoning was because they're arguing that the debt ceiling fiasco and things like that are making the US a little bit less secure, but it doesn't make sense how they just happen to be making this announcement, this downgrade in August when the market tends to slow down, right? I'm not saying I could prove that this is the truth, but it's very suspicious how the timing happens to be right now. Could it be that a lot of these fund managers want to see the market dip and they have to find some kind of catalyst to dip it so they can start to buy back as the market dips? Who knows, right? That's a possibility. Not a guarantee, it's just one possibility. But it did not make a whole lot of sense for them to announce it right now about an event that happened many, many months ago. All right, I just wanted to note that. Very, very strange stuff. Now, right here, we had Janet Yellen speaking today. Janet Yellen was speaking all about this event, and she was saying that it's nothing to worry about. It basically has been trivializing the USA. It's basically nothing that we should be too scared about. And she said the US and the economy are still in decent hands. She also mentioned that as time goes on, we should not be too worried about this, and this could most definitely improve. But she believes that this rating was not necessarily justifiable and did not make a whole lot of sense in her opinion. That's what Janet Yellen just said not too long ago. JP Morgan CEO Jamie said basically the same thing. He said it's very ridiculous and it doesn't really matter in his opinion. So these are just some important opinions I wanted to share with everyone. Now, when it comes to the data coming out for the markets, we do have one big piece of data that's going to be the biggest one. It's going to be initial jobless claims 1 hour before the market opens. We want this to be very close to the forecast, not way too high or not way too low. So we want it to be around 225,000. Then we have continuing claims coming out for the 4-week average, which is going to be very similar, basically the same thing in terms of what we want the forecast to be. And then after that, we have the PMI reports coming out 15, and then 30 minutes after the market opens. So expect some volatility during those times. But besides that, that's not going to be the biggest thing for tomorrow. The biggest thing for tomorrow is going to be this right here. Now, currently, PayPal has its earnings. It was down the last time I checked it. We're still waiting for the call. It hasn't really started at the time I'm recording this. So there's not a whole lot for me to say about PayPal for now. We're just waiting for the data to come out. But if PayPal truly does drop, as of right now, it's a little down. We will see if that stands. But if that happens, that could be a little bearish for the market for tomorrow. So we could see a little bit more downside and some more sideways price action. But I do believe Apple and Amazon are not going to tank too hard. I think these things may try to hold up. So the market may not like come crashing down tomorrow unless there's another bad piece of news. The odds favor the market trying to hold up, at least to some extent. Now, here's the thing about it. Even if the market holds up tomorrow, there's no guarantee it's going to reverse because once the big tech stocks out there, once we have Apple and Amazon announcing their earnings, whatever happens to them will dictate the entire markets. If these two giants end up falling, the whole market is going to tank, right? This ends up affecting so many different like sectors out there, right? Consumer discretionaries, not to mention many others out there. This is going to be very important, and whatever happens to them will dictate the entire flow of the market for Friday and also Thursday after the market closes. If these two pump, that's going to give some hope for the bulls. If they dump, that's it for the market. The market's going to sink lower. Now, what I can tell you, though, about how this is going to go is technicals look more bearish on the market. You can see we have a clear head and shoulders on SPY that's starting to play out. We have these imbalances down here that need to get filled. We have an unfilled gap at 446 on SPY. There's also some in the lower 440s. There's a good chance they're going to get filled very soon. But for tomorrow specifically, we're going to be watching if 450 could hold on SPY. If it breaks, you're going to be watching around 448, and if not, as low as I would say like 447.5, and then we have lower levels than that. So we're going to be watching those levels very carefully to see if they hold. And then on top of that, you're going to be watching for resistance around 451.5, 452, and 453.8. Now, I don't think the market is going to bounce that hard. It currently looks a little bearish, but there's a good chance we're going to see some bulls trying to defend 450 to 447.5 within that range. And I do believe SPY could drop a little bit more, but it's going to actually stay kind of close to where we are, which is around 450. I don't think it's going to come crashing down insanely hard unless something really bad happens. So I'm seeing kind of like a sideways day with a little bit of downside associated with it. And then the real big move is going to come after Apple's earnings. That's my view of SPY. Now, for Tesla, unfortunately, things are not looking that great. It used to be stuck between the 50 and the 200. It actually broke below the 200 EMA. It's currently hovering below that. Right now, the support that's holding it up is around 250, but the trend is looking more bearish on the 4-hour time frame. I'm going to be looking at how Tesla ends up moving. Could we see a small bounce tomorrow, maybe a retest of like 255? And if that fails us, we're going to be watching this 250 support. If 250 ends up breaking on Tesla, this thing is going to come all the way down to about 240. 248, then we have like the mid 240 level below that. Then we have those gaps all the way down into like the very high 230s, which are likely going to get filled, which is going to drag Tesla down. When is this going to happen? The truth is, I don't truly know. It's going to depend on earnings and other catalysts. But for now, technicals look more bearish. Tesla's broken below the 200. It needs a very bullish catalyst to try to make a comeback. And so far, it's looking unlikely. It looks like the odds favor downside. For Apple, let me just add that Apple's looking a little weak. Going to be seeing if this thing can try to bounce off this 192 support. If it does do so, we could be seeing a retest of like 193. But then I just see it trading sideways tomorrow, approaching its earnings. Then we're going to see a very big move depending on what happens. If earnings are very strong, that's going to be great and all, but guidance is going to be the bigger thing for these big tech stocks. Strong guidance could send Apple up. If not, it's going to get another rug pull, which is going to sink the whole market. We have to be very careful. It all depends on its earnings. For the triple Q, we have resistance around 375, 376.25. Then we have 378 above that. If we break down, you're going to be watching 373 as support, 372.5, then 370 below that, and then 368 below that. Sorry about that, guys. In my opinion, it's looking a little bit more bearish. It looks quite bearish so far. Going to be looking for a retest of like 375, maybe 376, and then a rejection, more sideways price action, then a very big reaction after Apple's earnings comes out. That's going to be very important, so make sure you guys are watching for that. For Nvidia, it's looking relatively weak, unfortunately. We didn't really get this nice pump we were hoping for. It ended up just stopping right here after we got this new piece of news. And now Nvidia is not necessarily done. We're going to be watching to see how it tries to hold above this support right over here around this 440 area. Could this thing try to hold it, especially for tomorrow? If it breaks, I think PayPal is going to dictate how it moves alongside the whole tech sector. You're going to be watching 433 as support. And if that fails us, then we're going to be watching this imbalance down here around this like 425 area and our 426 support at the 200 EMA. And if that fails us, then we have 416 coming next for Nvidia if that ends up breaking. So we're going to be watching this very carefully. It is unfortunate Nvidia wasn't able to hold. So please be very patient in the market and be very careful. Based off technicals, make sure that you are always open-minded simultaneously because we don't know what news will always come out. Unfortunately, AMD's earnings was not too good, and it came all the way down to its 109 support, and it does not look like it's done. We could see this thing make an attempt to retest like 109, then come back to 107, and potentially 105 after that. It still is looking weak, unfortunately. Earnings was not what we were expecting, and things like that happen, right? It is what it is. For the VIX, it's starting to break out, up 15%. We're going to be testing this 200 EMA. We could see this thing trying to fight for it, so maybe come down a little bit and trade a little sideways around here as it fights for it. 16.8, 16.5 is where our resistance is going to be. If it breaks this, we could see this thing pushing for the 17s. This would be because of the market sinking more. We do have an indicator of that potentially happening. Looking at the dollar index, this thing is also breaking out, which is a bearish signal for the markets. If it continues to hit 103, that is once again going to slow us down, and it looks more bullish, which suggests the odds favor downside for the markets based off technicals for now. For the 10-year Treasury yield, it's also breaking to the upside. That's another bearish signal. Everything is pointing in the same direction that the market likely has more downside coming. Looking at Google, unfortunately, Google is getting very close to this previous support right over here, which is this previous resistance, which is now going to become support around 127. If it breaks below that, you're going to be watching 125. Those are just two supports to watch for on Google. Looks like it's going to test those. May try to bounce in the morning, retest like 129 or so, then drop a little bit lower before we see it try to base. For Amazon, unfortunately, it's not looking that great either. It's testing our 200 EMA. If it breaks below 127.8, we're going to be watching 125.8 below that. And if you want to see resistance, you're going to be watching 129, then 130.6, and then 131 above that. So watch these levels very carefully. It is looking a little weak for now, but then don't worry too much about Amazon. Wherever it goes tomorrow, it should try to base between 126 and 128 because when earnings come out, we could see a very big move for Amazon. It may get a big bounce or it may come crashing down. We got to be very careful, especially in a market like this. For Meta, unfortunately, Meta is testing our 50 EMA, not looking that strong with a bearish cross on the PPO. And on top of that, it is once again at the 50 EMA. If this breaks, right, this is a historical support for it. It was holding above this many, many times for almost the entire year, basically, besides one drop below it recently. But I just want to mention that if it breaks below this 50 again, it's going to come all the way down to this imbalance. I'm going to expect it to come all the way down closer to like 300, especially if we break below this support right here at 304. There's a good chance it's going to test 304 to 300 if it breaks below 312. If not, it could try to make a bounce. I'm also going to be watching 310 as support, so watch all these levels very carefully. My gut tells me this thing is going to try to bounce in the morning a little bit, retest like 315, then continue sinking, and get a test of 312, if not 310, very, very soon. It may not drop as hard today, or not as hard as today, I mean, and for now, I'll just watch support and resistance and then get ready for Apple's earnings because it's going to be very, very impactful. All right, so thank you all so much for listening. Please have an absolutely spectacular day. Unfortunately, the market is once again reacting to this new piece of news, which was likely put out there just to cause the market to drop. There's no great reason for this to have come out right now. They're using data and information that happened like many months ago, right? Back in May, to use that as an excuse to get the downgrade. So it is what it is. I mean, things like that happen. The market was due for a pullback anyways after getting all the pumping and seeing how extreme greed has been in the markets. But we will see what happens, as tomorrow is going to be a big day. And please expect high volatility, especially near the very end of the day, right before close. And then going into Friday, it's going to be a wild day as well. All right. Thank you for listening. Have a great day, everyone. Market to the moon, as the long term is still incredibly bright despite the short term fluctuations. And peace out.